Do you know how to invest during an election year? Are you prepared for the best and worst case scenario of who might get elected? In this short video, I'm going to separate the facts from the fiction so you can make the best investment decisions. Hi, if we haven't met, my name's Tony Hansman. I'm with Guardian Financial, and we're a wealth management firm. And we help people just like you who are in or they're near retirement. Make sure to hit that like and subscribe button because things are always changing. We absolutely want you to stay in the know. I'll make sure to link everything that I talk about in the description box below. So let's go ahead and jump right into it. First, let's talk about fiction and what you can expect during this election year. I'm sure there's going to be a lot of hot headlines. You must remember that news stations will do about anything to get your attention, and that often means some catchy headlines and stories to draw you in. Remember, they're a media company trying to get more viewers so they can sell more ads. So you have to keep those spicy topics going. For investors, this is the complete opposite emotions to making sound, wise financial decisions. So always remember to take a step back and remember where that information is coming from so you can make the best decisions. In my next video, I'm going to break down the emotional cycle that investors go through so you can catch yourself before making bad investment choices. Besides spicy headlines, I believe the other item you have to be aware of this year is AI. AI is growing so fast, and I've already seen some pretty scary ways that AI could be used and abused. I don't want to scare you, but I do want you to be aware and in the know. Be very cautious of what you're seeing and what you're hearing to make sure that it's always coming from a true and a reliable source. Now to the facts. First Trust put out this very interesting piece that I want to share some facts. This is a snapshot of the S&P 500 index returns in a presidential election year. On the right-hand side, you can see over the past 23 election years who and which party won the election, and more importantly, what the rate of return was during that election year. And very interesting, 19 of the 23 times has provided a positive rate of return. So don't get caught up in all the hype and horror. With only 4 down years and only 1 time was it double-digit negative. That's 83% of the time the returns have been positive. Now, from 1928 to 2016, if a Republican was elected, the average rate of return has been 15.3%. And if a Democrat was elected, the average rate of return has been 7.6%. All of the elections averaged together, 11.28. This doesn't mean that past results guarantee any sort of future returns, but knowing the facts can help us all make better financial decisions. And in my opinion, you don't want to be timing the market. You don't want to be going to cash, jumping in and out of the market based on who's in office. This is underperformed versus if you had just simply stayed in the market the entire time. Always make sure you're staying connected to your retirement plan. Make sure your income needs last your entire life. Nobody wants to run out of money and be a burden on loved ones. Know your risk tolerance and investments and make updates to those accordingly. Make sure you're implementing tax planning to reduce your tax burden. And finally, always make sure to consult a licensed professional who understands your specific goals and dreams.